Um, did you know that prominent investor Cathie Wood just gave an explanation of Tesla's future? As a well-known Tesla supporter, Wood values the firm at the level of an extremely bullish investor. Stay tuned and keep an eye out to see what Cathie Wood has to say about the future of Tesla. There's ongoing discussion about whether Tesla is overvalued or undervalued. Investors are worried because of the recent decline in the EV company shares. Despite this, a lot of Tesla supporters think that with all of the improvements the EV firm has in store, the company's stock will surge very soon. Watch today's video to hear Cathie Wood's thoughts on Tesla's future. Our long-term prognosis was recently revealed in a report, and the numbers have increased significantly. However, we believe it is terribly undervalued, and in a recent interview, Cathie Wood stated, there are two assumptions that have changed in the last couple of reports in the financial world. Who is Cathie Wood, and why is her opinion important? Cathie Wood is an American investor, a renowned stock picker, and the founder, CEO, and key of ARK Invest, a $60 billion corporation that makes investments in cutting-edge technologies, including genomics and self-driving cars, according to Forbes. Because of her ability to persuade others with her investing arguments and her track record of success supporting her surprisingly astute claims, Cathie Wood is frequently referred to as the most underappreciated investor in the game. Every month, Cathie Wood sends out updates on a variety of topics, including innovations, monetary and economic policy, her area of expertise, and her thoughts on Fed decisions. The United States Central Bank, the Federal Reserve System, or Fed for short, is in charge of overseeing the country's financial and monetary systems. Based in St. Petersburg, Florida, ARK Investment Management LLC, sometimes known as ARK Invest, is an American investment management company that oversees a number of actively managed exchange-traded funds. ARK Invest provides investment solutions to investors looking for long-term success in the public markets with a singular focus on disruptive innovation. The company managed $50 million in assets as of February 2021. Cathie Wood, an American investor, created and currently runs ARK Invest. She is often regarded as the most underappreciated investor in the game due to her ability to persuade others with her investing arguments and provide evidence of her remarkably astute observations. Although Wood was said to have sold her Tesla shares earlier this year, she's now returned to the company after purchasing additional shares following the early June market decline. Her two exchange-traded funds purchased Tesla stock. Our autonomous technology and robotics ETF, ARK, purchased 1893 shares, while the ARK Next Generation Internet ETF EDUR purchased 1107 shares. The most recent research report from ARK Investment Management projects that the price of Tesla shares will be $4,600 in 2026. This is roughly 7 times the current price at which Elon Musk's company's stock is trading. Over the past few months, Cathie Wood has watched her growth heavy portfolio progressively lose billions of dollars in value due to rising interest rates and the decline of riskier equities. By the start of the second quarter of 2022, the portfolio value of her equity assets had decreased from $33 billion at the end of December 2021 to about $23 billion. Wood increased his interest in 140 stocks throughout the time, sold out to 46 companies, bought 38 new stocks, and cut his holdings in 167 stocks. By the end of the first quarter of 2022, Tesla Inc., Coinbase Limited, and Roblox Corporation were among the top equities in the ARK portfolio. Wood has increased her bets on growth even after ARK Investment Management has suffered a setback. In a recent webinar appearance, Wood criticized the central bank for raising interest rates too quickly, pointing out that the world economy had already entered a recession and that stock volatility was an indication of investor fear. In this context, Wood emphasized that there were numerous signs of an impending bear market with investors attempting to short creative companies. Wood says these shorts will have to cover their positions, and he uses this as a perfect illustration. Over the last 12 months or thereabouts, Tesla has continuously been Wood's largest holding. It was also helpful that in 2021, when many of her other significant positions fell, the stock increased. ARK Invest sold the company's shares on a regular basis and used the money raised to irrigate her weeds. With the market down 43 from its peak, Wood is once more a buyer. Despite the fact that most major automakers are now targeting the EV market, Tesla continues to hold a commanding position in it, with gas prices out of control and competitors unlikely to catch up to Tesla's exclusive supercharger network of charging stations. The company has the right product for the right times. The number of electric vehicles sold worldwide increased to 6.6 million in 2021. And the trend is still going strong. According to the International Energy Agency, EV sales increased by 75 year over year in the first quarter of this year. Elon Musk Tesla is the top EV maker. Despite rising raw material costs, Tesla's operating margin increased by more than 4 percentage points year over year in the first quarter, setting a record for sales. Wood has a great deal of optimism for Tesla and EVs. According to ARK Invest's most recent stock model, Tesla may be valued at an astounding $4,600 per share by 2026, a 560% increase from now. At $721.64, the price of Tesla shares has increased by 0.2%. Wood regularly buys EV stock, demonstrating her support for her confidence. With a weighting of 7.23% overall ARK Invest ETFs as of June 21st, it is the greatest position across all of them combined. Is Tesla undervalued or overvalued in your opinion? Post your ideas in the space provided for one of their bull cases for Tesla under the previous model, according to Cathie Wood, was that it would lose 1/3 of the market share it held in 2018, or 17% of the worldwide market share, including China, as rival EV companies entered the market. But over the previous year, the percentage rose to 18%. When asked what she felt about big businesses trying to compete with Tesla in the production of electric vehicles, Wood said that they are failing badly. She claims that because they're not documenting the consumer electronics cost curve that Tesla chose to run down, they're failing on the battery technology front. She said that when Tesla first started using phone batteries in the bottom of the car, people used to make fun of them since those same phone batteries have a tendency to blow up. According to Wood, Tesla employs a lithium-ion pouch, which is far more expensive than the batteries it uses for its consumer goods. As a result, businesses that want to take on Tesla will have to sell every electric vehicle at a loss and risk losing the market for internal combustion engines. According to Wood, the reason Tesla is so far ahead of its rivals is because they are still in the early stages of their development. According to her, the vehicles they have supplied thus far don't even come close to matching the Model S's range or other specifications from Tesla. The CEO of ARK Invest stated that Tesla possesses 3 more benefits. Batteries come first. Secondly, they possess a chip with artificial intelligence. Wood claimed that their analyst James Wang, who spent 8 years working at the artificial intelligence giant NVIDIA, was astounded by the specifications of Tesla's semiconductor. According to Wang, Tesla is 4 years ahead of all other automakers in terms of available semiconductor technology specs. This is critical to Tesla's objective of using electric vehicles to become autonomous. Artificial intelligence initiatives are directly related to being autonomous, and the winner will have the most and the best quality data. The nearest rival, Waymo, only has 20 million real-world driving miles compared to 14 billion for Tesla. Lastly, the fact that Tesla is the only manufacturer still able to change performance through over-the-air software updates gives it an advantage over rivals. According to Woods, the cost of an electric vehicle will begin to fall below that of a gas-powered vehicle over the next 18 months to 2 years, and it will keep falling as we ride down the battery cost curve downward. So if you look at the red expenditure of the traditional automaker, Wood gave General Motors as an example. She stated that $25 billion, or 10 of GM's RT budget, is devoted to electric vehicles. Considering what's going to happen, they ought to be at practically 100 right now, according to Wood. Berlin, Germany requested Tesla to develop a factory that would span 200 football fields for soccer or football, since they knew they would have to make adjustments and would likely lose a significant number of jobs. For more films like these, don't forget to check our other videos and subscribe to Tesla Stock.